Okay. All right, here we are. Hello, everyone. Thank you for attending this current Zoom webinar. My special guest once again is Richard Advani from Supreme Lending, who is a mortgage loan consultant, not only for my network, which is Wing Yi at the Yi Real Estate Network here in the San Francisco Bay Area. We are a real estate investment club, and Richard Advani is our primary investment loan advisory team who help our investors to buy several markets, but he and his team at Supreme Lending also does investment loans in all 50 states. And he also does owner-occupied primary residences for regular people, regular buyers all over the country, mainly in California, because that's where he's located, Richard, in Southern California, where we are. I am in Northern California Bay Area. So we covered all the California, but my investment methodology and business model is such that I'm the broker. I'm not gonna say the word broker. I'm not a broker. Although I'm a licensed real estate broker in California, but I'll refer our investors, mainly most of them from California, to buy out-of-state turnkey properties in the best cash flow exploding markets in the country. And as a matter of fact, that's the theme of today's webinar, which is how for real estate investors to maneuver in this very challenging real estate market, to say the least. Okay, so many of you already heard about what's going on because people have access to information. So through various social medias and YouTube videos and other seminars people attend, but we're gonna, Richard and I gonna use our vast experience, to give you some insight as to how you as a real estate investors can thrive in this very challenging market. So before Richard will speak, I'm going to say something like this. I'm going to start by saying, let me give you one example, somewhat rather extreme. In fact, let me start out with a joke, okay? I may get this wrong, Richard, you may want to correct me. So I'm just thought of it. My joke is, how many Austin, Texas realtors it takes to change a light bulb? The answer is only one, while the other 14,999 realtors in Austin are watching. What I'm trying to say, there are 15,000 licensed realtors in Austin, Texas right now, and there are 200 homes for sale. I repeat, 200 homes for sale. So really a good market, a equilibrium market where supply equals demand. Typically, there are 6 months inventory, right? 6 months of inventory is a good, normal, realistic market. In this particular time right now, in March of 2021, in Austin, Texas, I believe they have about 2 weeks of inventory available right now. This is mind-boggling. I don't know about you, but I've been in the real estate investment business for 15 years, and Richard similarly. And I've never seen this disparities between supply and demand. It's just crazy. So I know Austin, Texas is a little bit of an extreme, but I could say, Richard, correct me if I'm wrong, I could contact a realtor in, let's say, in Butte, Montana, for example, isolated state, isolated city with maybe 10,000 people, whatever. If I were to ask that realtor in Butte, Montana, or even a city in North Dakota, a small little city in North Dakota, if I ask the realtor, well, how is the real estate market in your area? They say, oh, we're booming. We have multiple offers. We have bidding war because there's not enough homes to buy. Da 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 da. So Same thing in California, right? Here in Northern California, I see some of my realtor friends, they tell me they have a $1.3 million listing in my local area in San Francisco East Bay, and and someone within a few days have bid 20% over asking. So 1.3 million becomes sells for 1.6 million. Some ridiculous things. So same thing with Austin, Texas, right? Austin is amazing. This one of the market that that I've been promoting for a while now. You have a single family home, new construction, not no resale. I'm talking resale, like listed at 200 grand, then they'll be like multiple offers. Then a few days later, it sells for 275K. Another scenario, a house in Austin, a single family home was listed for 300,000. It sold for 375K. Another situation, a $500,000 house in Austin was listed and it was sold for like 650, even 700,000. And there are several $1 million homes in Austin. It was listed for 1 million. It was sold for 1.4 million in a matter of days. So I know the example is very extreme. So with that in mind, okay, so you know what's going on in many other areas of the country. So Richard, so what I'm trying to say is the reason why we're seeing this tremendous activity in real estate is even before the pandemic occurred last March 2020, I personally have already seen, I kind of saw it coming just a little bit, not to the extent that's happening right now, but I've seen a shortage of houses already because during the past 10 years, ever since the last recession in 2008 to 2010, builders are not building sufficient number of homes, and a population is growing exponentially. It's just so many people are here, growing families, growing family units, and then again, builders not building. And then now, as we entered 2020 last year in the pandemic, people are not selling because during the pandemic of the healthcare situation, some people are not selling. And because of the low interest rate, which Richard will talk about, the historic low interest rate triggered the motivation to a lot of people that wanted to buy. So, so in most market, their inventory level is like 1 month, around maybe 1.5 month to 1 month to 2 weeks of available inventory. I mean, just amazing. So that's why you see multiple offers and what have you. Then what I also seen, Richard, is that the lumber prices have skyrocketing. So the builders, especially the new builders in many markets, especially the market that we are doing in Texas and in Florida that we are promoting, I mean, they're raising their prices not only on a quarterly basis or monthly basis. Our builders are raising their prices on a weekly basis. So, okay, as an investor, here's what you should do, right? If you were to buy on your own without going through our network, if we want to buy a rental property somewhere out there, somewhere in good areas, south and southeast, cash flow areas, cash flow properties, a lot of my investors are doing that. If you gonna buy in a resale market, I could almost, it's a certainty for California buyers. Most of you are working full-time, have a career, have a job, have family obligations. You will not be able to succeed in today's resale market. What I mean resale market is the properties that are being bought and sold in the open market where everybody have access to it, the multiple listing service, if you will. So I could almost, I'm not gonna say the word guarantee, I mean, your chances of buying a house, a rental property, for example, as an investor in the Florida or Texas or any other good market with cash flows are slim to none because you are bidding against other people. I mean, we're talking 30, 50, 100, 200 offers are being made or submitted for one house sometimes, especially in the Austin market. So, it's a bidding war, 20% over, 30% above asking. So if you want to play the resale market game in Florida or Texas in the next few years, not just now, your chances of achieving buying a particular house is slim to none. So the other alternative, that's why we built our network the way that my business model. We provide turnkey properties, especially new builds, where when you buy new construction in our network, you're not subject to bidding with the general public. You buy based on the lots that we have available, the pre-construction lots that we have available, right? So when our builder, we have a business model, built to rent model, where our builders only sell to investors, right? When we have 60 lots available on a particular area, location, a city in Florida or Texas, that's 60 lots. I mean, you will, go in there, make a reservation, no need to compete, no negotiation, you just pay for the lot price. Lock in the price with your earnest deposit, a few $1,000s, your deposit. That's it. You lock in the price, then you wait for the house to be built in the next 6 to 9 months. Then you close escrow with a loan and what have you through Richard Advani's company, hopefully. So, however, having said that, we have some challenges as well. Our challenge is that our builder that we work with, their lots get sold so quickly because there are more investors they're buying, because our builder, they have access to other investment club, not just ours, right? And so that 60 lots will be gone in about a couple of weeks, because there are a couple of hundred real estate investors from my investment club, as well as other investment club, they are targeting the same lot. So not only that, because of the pandemic last year and this year also, the ability to get the permit from a local city is being delayed, because the courthouse in the local cities they only working part-time during the pandemic. So it takes 2 or 3, even 4 months just to get the permit to get the lot to build a house. Then when the permit is done, then our investors have the lot to purchase. Then you sign the contract, that's fine. Because of the delays of construction, lack of construction workers, and then the lumber prices skyrocketing, the builder, it normally takes 4 to 6 months to complete the house. Now it's taking 6 to 9 months. So if you sign up, for example, today to lock in, if you're lucky enough to get a lot from our builders in Florida and Texas, you might have to wait until the year 2022, next year, before the house is done. A whole year or even longer to close escrow, to get the finished house. So the challenge I'm asking you to do, investors out there, you have 3 choices. 1, do nothing. Do not buy. You wait. How long you wait? I don't know. A year later, 2 years later, 3 years later, or never, whatever. And Richard will discuss the severe consequences of waiting. Okay. And the second choice is you go out there in the resale market, do it on your own. Do not need to go through our network. If you do it on your own, once again, your chances are very, very slim of making it happen. And then the third choice is be patient, right? And just work within our network, within our builders, identify a lot. If there's a lot available for you, then reserve the lot and lock in on the contract at the price that you sign. And during the construction phase, the next 6 to 9 months, who knows, the builder may increase their prices, but you lock in the original price, and the equity built up from the increasing of the prices during construction is walk-in equity for you. All right, so with that in mind, so Richard, you have done a lot of loans for investors. Our investors from my network, as other risk investors, mainly from California. What have you seen? Why do you think that the market, the risk market, the way it is? What is your perspective? What is your comments about what I just said?
Yeah, I mean, you laid it out pretty good there, Xi-Ring. It's interesting because we all know, living on the West Coast, people trying to buy primary homes right now, it's beyond chaotic. I mean, I have multiple clients, friends that are 4 months into looking, that have pushed their budgets up dramatically from what they're originally planning, and they still can't get anything under contract, and everything still keeps pushing higher. The interesting thing is that we're seeing the exact same thing as it relates to out-of-state properties, really across the country, because of how many investors are trying to buy real estate right now. And I know, C-Wing, I know you can attest to last year being an extremely, extremely busy year. A lot of people in the real estate investment business had record years. And I can say the demand this year feels 40 to 50%, even greater. And I think there's a lot of factors that obviously are affecting that. One is, stock markets boomed for what, 8-9 years straight. I mean, it cycled down a little here and there in between, but it's had crazy returns. A lot of people, I think, are trying to capture those returns and diversify them. And we've been seeing not only the existing group of investors that we've been working with the last decade or so, but a whole new group coming in as well that hadn't invested in real estate before. A lot more millennials as well are interested, especially in out-of-state real estate, because the same people that are getting doors shut on them trying to buy primary homes right now on the East and West Coast are like, hey, you know what? If I can't do that, I might as well continue renting and maybe invest and buy a new construction property out of state. Now, that takes me to the second part of course, what you were talking about is it's amazing that we have access, and you've created access channels directly to developers to where people can come in, avoid the grind of trying to buy a house, which, look, I talked to one of my good friends / clients yesterday, and after 4 months of looking, he's like, I'm waiting the towel. I'm throwing in the towel. I'm going to rent for another year and wait till the market kind of calms down, because what you find out you end up doing, and it's the exact same thing if you're trying to buy rental real estate, is you're going to go and make offers on properties and you're going to have 30, 40, 50 offers. And if you're trying to buy these properties with financing, give up right away, because there's a lot of investors coming in with cash ready to buy these properties. So what you will find is you may spend 90 days constantly looking for properties, constantly submitting offers, and end up with nothing. And the other side of the coin is you could take kind of a more VIP approach, work with the developer, buy something new construction. Now, in all reality, that means you're not going to buy something probably this year. If you're lucky, maybe at the end of the year, but you are going to lock in a price on the property. You are going to lock in a new construction property. And at the end of the day, more than anything, you're actually going to be able to buy a property. Right now, going on in the open market, it's almost impossible to buy a property. As you said, there's so many offers on every property that, you kind of don't have much of an option. So I myself, the last year and a half, as things got more competitive, have also been buying new construction properties that weren't going to be ready for a year and a half out. And honestly, it works out amazing, because at least thus far, prices have gone up while I was waiting for that year, and especially in a high demand market like there is now, if anything, by the time that house is ready to be built and you're ready to close on your loan, it's going to be worth more than you went under contract on. And the best thing of that is once you and I pay our deposits in 2021, by the time 2022 rolls around, you don't actually take out the loan now, right? You're just putting a deposit on the lot and on the home, but the builder's actually taking out the loan, and the builder's actually the one who's, getting everything done with the construction. So you only come in with your financing, and you only start paying interest once the home is 100% complete and you have the ability to put a tenant in it. So all in all, it's really a winning formula. And what we've seen is a lot of people are moving to the suburbs because of COVID, and, the dynamic of city living, I think, is probably going to be forever changed because of this. But what's ended up working in our favor, as you can imagine, is typically the types of areas that will cash flow for investors and make sense are the suburbs. The cities are priced too expensive. So not only have most of us invested in those suburb type areas the last 6 or 7 years, we continue to do it. And subsequently, the whole dynamic has shifted to where everyone wants to move into the suburbs. So, out of the 18, 19 properties I own right now too, we don't have any vacancies. There's so much demand to buy homes. There's so much demand to rent homes. So locking in a property now, even if it's going to be ready a year out, number one is kind of like I said, the VIP experience, because you're not fighting the masses. It's not, Black Friday morning at 5 a.m. with Best Buy opening the door and throwing elbows at each other, because that's almost, almost what it's like right now trying to buy a home. So you avoid that, you lock in the price. Yeah, you may not get your flat screen right away, but you're going to get it at a good price. The price will probably be higher by the time you pay for it. And, you're actually going to be a part of the market and the growth, whereas otherwise you're going to be standing kind of on the sidelines.
Oh, very well said. Very good overview, Richard. As a matter of fact, the benefit of working through our network is we have identified builders who are willing to work with investors. You'll be surprised. There are many builders out there in our good markets in the South and Southeast, which is the best cash flow market, as we all know by now. For those of you who have been part of my network for a while, a lot of builders are not open to their new builds to investors. Investors are completely shut off. So, however, again, we have builders in Florida, Central Florida, and Southwest Florida, and Central Texas, Austin, a little bit of Austin, much more challenging right now. And right below Austin, San Antonio, we have builders that we are about to work with. So that's the beauty. We have done all the homework for you. Now, let's go back to Austin, Richard. So Richard have done some loans for some of my investors. As many of you know, I've been promoting Austin, Texas for a number of years through our partner, Ken Renner, with Renner Realty. And before, prior to 2020, I try to tell my investors, like, Austin is the Silicon Valley of the South, of the Southeast, and please invest right now before the market changes. And for those of you investors that pulled the trigger before last year, 2020, and you know who you are, which is not that many, okay? I'm very, very disappointed that not enough of my investors who pulled the trigger to buy single family home rentals in Austin before last year, before the pandemic. I mean, those were a handful. In fact, last year, 2020, there were only a handful of investors purchased. And you know who you are. You're laughing your way at the bank. Let me give you one example. This investor that I have, I'm not going to reveal his name because I do not have his permission. What he did was, around 3 years ago, he did a 1031 tax deferred exchange, right? So he sold his Bay Area rental with a lot of equity. Then he replaced with the profit. He purchased, I think, around 10 properties in Austin, Texas through my partner, Ken Renner. That was like 3 years ago, right? I think he bought it for like anywhere from 150 to 175K. The single family home, new construction, 1,400 square foot, 3-bedroom, 2-bath, 150, 175K around 3 years ago. Just last year alone, 2020, right? The 10 homes increased in value. Right now, the current value of his home, he still have them, of course, his long-term buy and hold. He bought for 150, 175 3 years ago. Each of those properties is like 250, around 250. So he gained around
$1 million.
Okay. Okay, I don't hold that thought, Richard. You stole my answer. You stole.
Sorry, I like doing math.
Last year, each of his home increased by approximately $100,000 of equity. So 100, just last year, his 10 properties increased 100 grand per property equity on paper, at least, right? He's not selling. $100,000 equity multiplied by 10 properties he bought a few years ago. In the year 2020, he made $1 million. You know how he did it? He made while he was sleeping. He's sleeping comfortably in his nice house in the Bay Area. He made $1 million, not even working, just sleeping peacefully, and money grows on trees for him. Okay, what are your thoughts, Richard?
Nothing. I just remember attending one of your events 3 years ago where you're pushing Austin, and I wish I listened.
Oh, I wish too, but
Insane, and it's there's great fundamentals that's driving it, right? It's not just the market's gone up and there's supply and demand. I mean, just all the tech moving in,
right.
there's fundamentals, so that's not going anywhere. It's going to keep running up. You know, and most of the time, even going in the suburbs, you'll be lucky if you lose $100 a month. You know, maybe you can make $100, but man, it's a great market to invest in if you can make the numbers still work. And if you're looking long term, because it's definitely a growth play.
Yeah. By the way, guys, because of rising prices and the rent have not caught up as much, you know, investors, Richard, you know, you do so many investment loans, right? You're upfront and personal with my investors doing their loans. You know all their financial profile. The cash flow is not going to be as high with the new builds, right? If you're expecting 6% cap rate or higher, no, you're only getting a minimal monthly net cash flow on 20 to 25% down payment. But do not focus on cash flow only, given the today's environment with the new builds. Focus on potential appreciation, even though I don't like to talk about appreciation, right? It's I don't want to, you know, I don't have a crystal ball, but let me see. Richard, Richard, I mean, since you're a loan officer, so let's talk about, you understand the interest rate environment. I believe the naysayers, the negative people out there, they're going to say, oh, don't do it. Let's wait, or there might be a crash or a bubble or a correction. So, you know, all those, you know, analysis by paralysis. But Richard and I do not have a crystal ball. You and I talked about it on our previous podcast. But you are even in a better position than me because you are a loan officer. You understand, you know, economics and all that. That's your job, really. So why do you think, what are your thoughts about this doom and doom, risk going to crash in the next few years? I mean, all this. Bring it back.
Yeah, I mean, the first thing to note is real estate was obviously a huge part of what led to the last crash. Well, I mean, let's be straight. It was the reason for the last crash, and not really real estate, but it was more really my industry, mortgage lending, and how easy it was to get a loan and how many people got loans that shouldn't have. So people started buying homes in this artificial bubble that was created because of really how easy it was to get a loan. And everything came crashing down. A lot of those, all of those issues that led to kind of the false market because of how easy it was to get a loan have been remedied with Dodd-Frank. So what we see today, obviously, is the economy is doing very well. The housing market's doing very well. It's not influenced by, you know, ridiculous mortgage rules, you know, or rather super easy mortgage rules. The drivers are more positive than they were before. So, you know, is real estate going to crash and drop to 50, 60% of its value like it did on the last real estate induced crash? Not in my opinion. If the whole economy goes into a recession because of some other factor, our real estate price is going to move back a little bit. Are they going to correct 5, 8, 10, 20%? Maybe, possibly. But at the end of the day, that's not going to change your bottom line in terms of the rent you're getting and the cash flow that the property is generating. But also that means that's a bigger opportunity for you to buy more real estate. I mean, you dollar cost average, much like you do with stocks. So people ask me the same question a lot is, hey, are you still buying? And what happens if prices drop next year? Well, if prices drop next year, I'm going to buy more. And that's not going to change my mortgage payment. And that's not going to change the amount of rent I'm getting on the property. And I'm looking at this long term. I'm not trying to sell. So, you know, if some appraiser comes out and says, hey, your home's worth 180 instead of 200,000, it means nothing to me. And I'm going to ride that wave. And what a lot of people don't realize is even on the last crash and values dropped, if people would have held on just 3 years, 3.5 years, they would have recovered everything that was quote unquote lost. And you only lose when you need to sell. And what we saw was, I would say, in my opinion, 60% of the people that short sale or foreclosed their home didn't need to, if not even more. They did it because they jumped on the bandwagon and they were like, hey, the home's worth 200 grand more than I owe. And even though I can't afford my payment, and even though I'm not trying to sell, you know, let me just sell it. And 3 years later, 4 years later, that home bounced right back in value. So once again, it's not going to affect my investments. My investments are made on good fundamentals. Most of the properties that we bought and that we continue to buy, they have a margin in there of cash flow. If you're buying a property, new construction property in Florida, you're going to make, depending on your down payment, $200, $300 a month cash flow. So what happens if values drop? What happens if rents drop $150, $200? Okay, well, now you're only making $100 a month cash flow for that interim period of a year, 2 years until things recover. It's still a positive investment. It's still going to generate a return. You're still paying off the balance. You're still getting the tax deductions. So I'm not afraid of a correction or a reduction in the real estate market. But yes, if there's a major recession, everything's going to get affected, right? Stocks, real estate, everything in between. And is real estate immune to that happening? No, but that's going to create new opportunities in my mind.
Very well said, Richard. Here's my perspective. You look at the economics 101, demand, supply and the demand, right? Right now, even when the builders are ramping up all over the country, try to build new homes, and they are building it very, very slow for the reason we just stated, all the delays with everything, right? The builders are trying to, in a catch-up mode. They would not be able to build enough homes to allow supply to catch up with demand. Or furthermore, I do not believe the people that even after the pandemic, when people are safe to sell their homes, it's still not that many of those people willing to sell their homes, right? So there's not that many resales can come into the inventory for this year or even for the next few years, because right now is such an extreme imbalance between supply and demand. I believe it'll take several years. How many years? I don't know, 3 to 5 years before supply of homes will catch up with demand. So we may have 6 months of inventory in a particular market. So with that said, right, with this demand exceeding supply, real estate prices has to go up. It will go up, maybe not 20% or whatever, like we have in some of the market that we just discussed, maybe 10 to 15% for the next 2, 3, 4 years, maybe 10 to 15% in the next 2 to 3 years or 4 years. Your property could have gone by almost 50% in a mere 3 years. Then the market will come down, will come back to normal market where the appreciation could be 0, could be 2 or 3% for the remaining few years of this decade. If there's a correction, there's not going to be that much of a correction. Once again, it's all about supply demand. The correction only going to be a very slight dip in your home prices. So this is no big deal. So that's my perspective.
No, to that note, C-Wing, what's the alternative? You sit on the sidelines, you earn 0.25%, 0.5% in a CD on your money. I don't know if everyone watching has been paying attention to, obviously, everything going on with the Fed market, but they're talking about inflation rates well north of 2%. Well, guess what? If you're earning 0.5% interest in a CD and the inflation rate's 2%, you're losing 1.5% every single year on your money. So to me, it's, you can't try to time the market. I ran into that with Central Florida, like Orlando. You remember when you and I were dealing in Orlando 7, 8 years ago, and it was even 5, 6, 4 years ago, and it appreciated very, very dramatically. And although I have properties in Florida, I had never invested in Orlando, and I kept telling myself, "Oh, I missed it. It went up 10% last year, and too bad I missed it." And I did that and did that and did that and did that, and it kept going up. And I kick myself for sitting on the sidelines doing nothing, because it's very easy to say, "Oh, well, I missed it. Let me not invest." And instead, you get on the sidelines. And then what happens when you don't invest, right? The next year goes up more and you're like, "Oh, well, I really missed it now because it went up even more from where I thought I missed it." So you continue sitting on the sidelines. Next thing you know, it's been 5 years. The asset would have gone up 50% by then. Right. And instead, you've earned 0.5%, losing 1.5% because inflation. and your $100,000 is worth $80,000 now, and you've done nothing with it. So I'm more afraid of missing out on the opportunity and the growth than I am of a correction and losing the money, because you could sit all day long and count your pennies in your savings account, but it's losing you money sitting in there.
Yep, very well said, Richard. I mean, so what you just said is not said in a way that you said it. It's just especially for a lot of newbie investors out there, it's very hard for them to pull the trigger because there's so much information out there, in a social media, right? There's so much negativity, doom and gloom scenario we see on our local news channel, the YouTube videos, the YouTube entertainers, they want a click bait. They want views, and they title the real estate video with so much negativism. People click on it, but there's a lot of misleading information out there who are or made to scare you. So it's all about, look, Richard, I mean, you as a loan agent, I mean, you get those loan applications from investors. Little do you may realize that I work in the trenches for my database, and I can only say for every investment loan application you get, not only from my network, from other investment club you work with, there are 99 other potential investors who are not doing a loan with you. So that minuscule percentage of people or invest in real estate, minuscule, whether it's a good economic times, bad economic times, that is a human tragedy, because not only my network, Richard, but other networks, and so there's so much great educational content. A lot of it is free, right? Well, years ago, Richard, when I started and you started 15 years ago, there were no YouTube videos that educate you about real estate information. There was no real estate investment club to provide free information. Now, investors have access to great content, great free information where you can do your research, do your due diligence, and all that, the whole 9 yards. And yet, still, the percentage of people that are pulling the trigger is at a minuscule level. So what I'm trying to say is a four-word, F-E-A-R, fear. That is the main reason people does not invest in real estate. My definition of fear is, what is the definition? Is
fear of missing out.
Yeah, fear of missing out. Another different. I forgot. I can't believe it. Anyway, doesn't matter. Okay, all right. I think we have overran our time frame. It's supposed to be a 30-minute presentation, but well, I think this is a great podcast, great content. I really appreciate, Richard, for you to provide some great perspective from on your end, and myself too. So at the end of the day, each individual have to take a step back and to see what is your motivation, what is your commitment, can you pull the trigger, and it's all about taking action. Just getting educated. Education without action is, to me, is really worthless. So Richard, before I let you go, what is your final thought? What is your triggering recap? What's your inspiration?
Just that I continue to buy real estate myself, and as Sewing said, or as I yelled out, my fear of missing out is greater than my fear of, what happens if prices move down a little. Inherently, factually, there's one thing we know: there's more and more and more people on this planet every day, and the land certainly isn't growing. If anything, it's shrinking in some areas. So I'm long on real estate. I'm going to continue buying it, and I'm pretty confident that if you look long term and you make sure, of course, that you're well capitalized to absorb a slight change in the market, that you'll do fine. But that's obviously me talking as a real estate investor and an experienced one. But I'm excited for the future, and it's crazy as an investor. And I've only been investing in real estate for 13 to 15 years, but it's just crazy seeing the amount of demand right now. But it's also exciting seeing how many people are getting educated about real estate and entering the real estate investment space. That's making it harder for all of us as investors. But I think it's also amazing to watch and see as more people take real estate as an investment more seriously, and not only as your primary home is your biggest investment, because it's not. Your primary home is a liability. It's not making you money. It's costing you money. But it's fun watching people enter real estate truly as an investment vehicle, because historically it works.
Absolutely. Richard, before I let you go, I keep saying that. I know you're very, very busy. Thank you for your time. Before I let you go, I'd like to say one thing, not only to you, but for my database. A lot of you know I'm in the forefront of investing. I enter a market before it gets hot. That's the key. Get in early. Okay. So I mentioned about Austin, Texas being is on fire beyond fire. However, there's a market that is trending just like Austin, Texas. I will. Should I spill it out right now? So I'm in the market I'm already in this market. I'm already doing it. So I'll let you know, and I might as well disclose it. We're going to enter this market already. My partnership with Ken Renner, Ken Renner in Austin. So the trend, what's happening in Austin is happening to a neighboring city. In fact, let me ask you this question. What is the Austin, Texas neighboring city that a lot of people doesn't even know what's happening? It's trending toward the next potential booming market. Same things as has happened to San Antonio is what? One quick answer I'm going to ask of you. I lost your picture, Richard. Hello? All right, never mind, Richard. I know you probably got logged out. All right, the answer is San Antonio, Texas. All right, that's all I need to say. Look for your email, look for information. We will promote that market very, very soon. Thank you so much for your time. This is Si Wing Yi from Universal Network. Have a nice day. Bye-bye.